Snipers, you have to see what's happening. The Bitcoin price this Friday, as exactly as we predicted. Bitcoin is now above 20,000 US dollars, and we have finally cleared all of the roadblocks to potentially see Bitcoin reach 25,000 US dollars. If we dive into the chart, as we talked about yesterday, the fulfillment of this falling wedge market structure would actually take Bitcoin not only above 25,000 US dollars, but all the way towards this 200-week moving average, showing Confluence here with the $25,000 level, potentially even to test the 50-week moving average. Now that Bitcoin is fully above the 20-week moving average, that's now the bull market support band. We can firmly say that Bitcoin is in the early phases of a potential reversal when we are above the 20-week moving average. As I mentioned yesterday, it's really easy to say that we're in a bear market when you're below the 20-week moving average, but now that Bitcoin is above the 20-week moving average, the narratives are starting to shift, and now we have to maintain price action above this 20-week moving average. And so let's dive straight into the charts and talk about what the important levels are, and then I want to discuss a lot of other things that are happening with the four-dimensional revolving parts, like the Bitcoin against SPY chart breaking a major resistance level after the ascending triangle that we were monitoring. But for Bitcoin right now, because we have now cleared the last roadblock here at 19,800, we have now officially opened up the door for Bitcoin to test the next volume resistance here at 24,300. This has been our target ever since Bitcoin had 4-hour and hourly candle confirmations above 17,200. Remember, this was the range that Bitcoin was playing in, getting above 17,200. And so it's not a coincidence that we're seeing momentum here and follow through with institutional volume. Let's move into the 6-hour chart. I love the 6-hour chart because I call it the institutional time frame. A lot of traders will trade on the 4-hour time frame, and so institutions will not put their volume on the 4-hour time frame. They will make sure to only print those volume bars on time frames that are not as popular. Of course, retail tends to always be on the opposite end of where institutions are. Institutions love fooling retail traders, and that's one reason we look at the 6-hour chart and we call it the institutional time frame. And so let's look at the volume here. Notice how not only do we have an immense amount of institutional volume here on the 6-hour chart, but we've yet to see any institutional sell pressure, indicating that this move is still in its early phases potentially. Of course, because we went above two roadblocks so quickly, 18,400, the market structural resistance, and the 2018 previous all-time high, or you can consider it the 200-day moving average. We can even look at this as the realized price. They're all showing Confluence here at 19,800. Now that we've cleared these two roadblocks, here's what I'm monitoring for the immediate short term during this weekend, snipers. Number one, watching whether or not we're going to be seeing any institutional sell pressure equate to the amount of buy pressure that came in to start this move. And then number two is I wouldn't be too concerned if during the weekend where the markets are the most manipulated, Bitcoin decides to come back down to test this previous resistance as a support. So 18,400 is more important than ever. And if you want an earlier confirmation, if we stay above 19,800, that's even better for Bitcoin because now we still have momentum to potentially test that $24,300 level before seeing these previous resistance levels get tested as a support. But because we have cleared the two roadblocks that we were monitoring, now the door is officially open for 25,000 US dollars, potentially even further than that if we can get to that 50-week moving average. And that 200-week moving average, remember, is showing Confluence here at the $25,000 level. So that's what I'm expecting for Bitcoin. And so this falling wedge, we are now officially breaking out of it. Not a surprise for those that have been tuned into the Snipers channel. Interestingly enough, and we'll get back to Bitcoin to wrap up this video, but if we look at what's happening to Bitcoin against the S&P 500, you can see why Bitcoin is seeing so much strength right now, because Bitcoin's pairing against the SPY has actually just broke this major resistance level that was a previous support. This is after Luna collapsed. We held this major level here, and then we saw what happened to FTX. We broke this major level, so a previous support was a resistance. You can see we are now above it. Bitcoin's valuation against the SPY has broke this very critical level, and that isn't a surprise to us because remember, all of the puzzle pieces that we were looking at throughout this week have been hinting towards bullish price action with the S&P 500. You can see above the 200-day moving average. And I wouldn't say that we have any bearish candle symmetry here. Notice how we have an indecision candle from Thursday. And then Friday's candle actually looks quite bullish. It has a bullish tail to it. The body closing fully above that 200-day moving average. This is extremely positive for the S&P 500 because now we really want to see some follow through here. And we want to see that continuation because then we can actually break this bear market resistance level. And that would actually be a very big deal here for the S&P 500. And the reason we're looking at the 200-day moving average is we've already been above the 20-week moving average here for the S&P 500. So it's about time that Bitcoin has now gotten above its 20-week moving average. The S&P 500 has been above the 20-week moving average for the past 2 weeks. And so the puzzle pieces are still on the side of the bulls right now. We have not seen any puzzle pieces flip to the bearish end. As a matter of fact, the DXY, the strength of the US dollar, I've been saying, even though mainstream media is saying that the dollar is so strong, actually over the last 6 months, we've only seen weakness for the US dollar. Now we actually broke this major bull market support level because the US dollar is below its 20-week moving average. It's the opposite of what's happening to Bitcoin and the S&P 500. We can actually consider the US dollar losing momentum potentially in the early phases to start a bear market, potentially some sideways price action. We don't want to call it a bear market just yet, but remember, we have to monitor the DXY very closely. Even though we are breaking this major support, that's actually just a confirmation that in the immediate short term, things are looking good. It's actually a very positive sign coming into this weekend, but at some point or another, we may see a relief here for the DXY to form that higher high, that lower high, at least one more move up, because this is the first time we're coming down to these support levels. And so this is what we want to be cautious about, but I wouldn't fear too much as long as the DXY is below that 200-day moving average. So even if we see sideways price action, that's going to buy us time to even see further upside for the equity markets and Bitcoin. Let's look at Ethereum. So something that was interesting about Ethereum in yesterday's video is that we saw the Ethereum to Bitcoin pairing sell off, with Bitcoin making these two major moves to the upside. And so what that typically means is that we're seeing Ethereum move into Bitcoin. And the reason this is important, snipers, is if you've been in this market long enough, for those that have been tuned into the Sniper channel for the last 5 years, we always talk about the Bitcoin pairing being so important, because if we're seeing the Ethereum to Bitcoin chart show strength with Bitcoin showing strength to the US dollar pairing, that means we're seeing new liquidity come into this market. That's preferably what we'd like to see in a bull market. But when the Ethereum to Bitcoin pairing is selling off, causing Bitcoin to move up against its US dollar pairing, then we're not necessarily seeing new liquidity come into the market. We're just seeing liquidity that's already there move into a different asset, being Bitcoin in this case, which I don't think is a bad idea right now. If you have altcoins that are in profits, notice how Bitcoin dominance is still very, very low, which means that it could be the early phases here of a reversal for Bitcoin dominance if we continue to see the Ethereum to Bitcoin chart sell off into Bitcoin. So if Ethereum keeps selling off into Bitcoin, Bitcoin dominance is going to continue further up. And so I think that we do need to keep Bitcoin dominance on the radar right now, because what if we're just seeing altcoins move into Bitcoin right now to hedge against even further downside? That's certainly on the table. If I'm going to speak to the bears of the audience, what I'll say is that in the immediate short term, we have these two major support levels. If you want to start looking at downside targets, the only way we would address downside targets at this point is if Bitcoin gets back below 19,800. Of course, I'll have a video out if that happens. And remember, snipers, if you like this content, remember to comment below and subscribe to our channel. But back to the charts, looking at this major support at 19,800, if we want any bears to get excited, we'd first have to get back below 19,800. And then if we do get below 19,800, you still can't get too excited because we have 18,400 now as major support levels. And so these being previous roadblocks are actually now to our favor. If you're a bull, these are now major support levels. These are places that Bitcoin can come and retest, and we could still potentially see further upside. Let's say we form some sort of a bullish flag here, right? Crossing below 18,400, that's when I would start to be a little bit concerned, because now all we have left is the major volume level at 17,204. And if we get there, we can even see further volatility. Things could start magnetizing towards that level. And so 18,400, the most important. And then we have 19,800. But as long as we're above 19,800, especially the psychological number of 20,000, the door is still open here for 24,300 for Bitcoin. And then, of course, the target that we have here over the midterm is around that $25,000 level. And then we can potentially start talking about the end of a bear market if we can maintain price action above the 200-week moving average. And so that's what you could expect to monitor here on the Snipers channel with me for those that continue to be tuned in. If we get towards this 200-week moving average, then we'll start calling the end of the bear market here with a full confirmation weekly candle above that 200-week moving average. But right now, we could still look at this as a potential relief rally. You know, ever since we saw the clocks change and 2023 started, we've only seen positive momentum in the markets. Let's see how long this could last. So far, though, we are seeing follow through, snipers. That's what I really want you to get from this video. The DXY is breaking major levels to the downside, showing weakness, losing momentum. The S&P 500 is actually above the 20-week moving average. It's getting above its 200-day moving average, potentially even breaking a bear market resistance level. Now Bitcoin is finally starting to catch up, back above its 20-week moving average. So things are looking good for 2023. The headlines, the mainstream, they're going to be extremely delayed. They're not going to get you the information that you need in the immediate short term. That's why you're tuned into this channel. That's what we bring to you guys. And to wrap up this video, I will also mention gold, a very strong close here at 1920. This is important because this shows us institutions are looking for a hedge right now. They're looking for a storage of value. Gold has been in a parabolic uptrend since the start of this year. And so this is extremely good for Bitcoin because Bitcoin also could be the alternative asset for institutions to potentially throw some liquidity into it. And we actually saw that happen this week with GBTC's premium coming a lot further down. It was at 43%. Now the premium is only at 38%, meaning that institutions were accumulating GBTC this week. And that's why we saw that premium go away. That really, it's a discount, so it's turned into a premium because at 43%, that was a better discount than now only 38%. So GBTC also showing signs of life there, which is very positive. And then across the board to close out the week, wow, look at this. Virgin Galactic up over 12%. That is beautiful to see. And then across the board, the total market cap, something we'll continue to monitor because remember the difference between the total market cap and Bitcoin right now is that Bitcoin did cross below the 2018 previous all-time high, but the total market cap didn't. Notice how we held this previous resistance here as a support level so far. And so garden variety market behavior would say previous resistance that now acts as support would mean that Bitcoin and other assets in the cryptocurrency market are going to hold up here, at least in the immediate short to midterm, because this is the first time we're really testing this major support here for the total market cap, and we have not broken down from there. And so could we see the total market cap get back above $1 trillion? It's currently sitting at 900 billion. It's very plausible, exactly as we've been monitoring here on the Snipers channel. Very positive to see Bitcoin against SPY move up today. I think that was actually a neutral puzzle piece that we can now switch here into a bullish puzzle piece. So it's green now. Very positive here to see Bitcoin against SPY in the green. So total market cap in the green, gold in the green. China has been doing well for the start of this year. Let's pull up China's traditional markets. You can see above the 200-day moving average now. It was previously acting as resistance. I told you guys I'd let you know if we moved above it. We did move above it. So that's positive. A very bullish close for this weekend, snipers. Remember, the weekend is the most manipulated in the cryptocurrency market. And so we have to have some sort of precaution coming into this weekend. But for the most part, I would say that if everything closed extremely bullish, we certainly have the opportunity for Bitcoin to get to 25,000, potentially even this weekend. Let's see what happens from current price. That means we have about 20% further upside. And for those asking, should I be entering into leveraged positions right now? At this point, I would not be entering into leveraged positions. I mean, that was, pretty much around 16,000, the best opportunity. For those in the Discord, we did enter into some leveraged positions here down at 16,000. And we consolidated for quite a long time after entering those positions. But now that we're in profit, it could be time to start taking profits around that $25,000 level. For spot positions, I think as long as Bitcoin is here at the midpoint of this range, that would be the best place to be entering into spot positions. I wouldn't want to enter spot positions at the top end of this range from 22,000 to 25,000. I'd rather be entering into spot positions below this range. Of course, for those that have been tuned into the Snipers channel, you had the opportunity to get in here at 17,200 because we had the earliest confirmation of this move to the breakout, the #1 cryptocurrency channel on the internet. I appreciate each and every one of you tuned into the channel. I hope you liked today's video. And thank you guys for tuning in to the Snipers channel this Friday. Let's see what happens. Bitcoin inside of the range with a support of 17,204. 2 roadblocks already cleared. No more roadblocks on the way to 25,000. That is the range resistance. 17,204 and 25,000 is what we're playing in. 18,400 and 20,000 are 2 very important support levels in the immediate short term for the short-term traders. Let's watch those support levels for those wanting to get those quick leverage positions in. Maybe when we come to first test those levels, that's your opportunity. Let's see what happens. Maybe Bitcoin goes straight to 25,000. It's a possibility. That's why you want to stay tuned to this channel. We know exactly what's happening. Nothing is unpredictable. These charts leave clues. And remember, the bear market, the best time to educate yourself and invest in yourself, snipers. Thank you all for tuning into the channel today. Until next time, snipers out.